federal financial regulators are on Capitol Hill this week, testifying before congressional committees on what led to the collapse of Silicon Valley Bank and Signature Bank.
Yeah, you can see right here the Dow was down today just over 37 points. Congressional investigators pushing for answers now as the government tries to secure the banking sector and hopefully prevent more problems. Channel 3's Chris Wynn is joining us from Washington right now with more. Chris?
Mark and Aaron, good evening to you. As all of this plays out on Capitol Hill, many economists say the rising interest rates the Fed deployed to help battle inflation is really at the root of the crisis for SVB, Signature, and other struggling banks. On Capitol Hill, U.S. financial regulators testifying Tuesday before the Senate Banking Committee as lawmakers in both chambers of Congress launch formal investigations into what caused the second and third largest bank collapses in U.S. history earlier this month.
The quick collapses of Silicon Valley Bank and Signature Bank were no ordinary failures.
Michael Barr, a top U.S. Federal Reserve official, says the meltdown at SVB started at the top.
This is a textbook case of bank mismanagement.
Barr testified that SVB had been on the Fed's radar since November 2021 when it was cited for interest rates and liquidity risks.
They didn't take the action necessary. They were quite vulnerable to risk, to shocks, and they didn't take the actions necessary.
The bank, he says, collapsed after depositors tried to withdraw $100 billion in a single day, driven by social media and mobile banking.
The bank did not have enough collateral to meet that. And therefore, they were not able to actually meet their obligations to pay their depositors over the course of that day, and they were shut down.
While the federal government stepped in to guarantee deposits at the two failed banks and set up a facility to help prevent runs at other banks, some lawmakers demanding regulators take further action to prevent a similar banking crisis in the future.
If it's the regulator's fault, it better be fixed. If it's the regulation fault, it better be fixed.
The congressional investigations into the financial sector's instability come as fears of recession are mounting. Many financial institutions heavily invest in things like U.S. Treasury bonds. But as the value of those bonds went down, that meant that banks like SVB and Signature didn't have enough funds to cover their customers' deposits. Live in Washington, I'm Chris Wynn. Mark and Aaron, back to you.
Chris, obviously this is something that all of us are really keeping a very close eye on. Is there other impacts to Americans as a whole?
Yeah, Aaron, that's a really great question. We've heard a lot about SVB and its connection to funding startups, but it's really important to note that with regional banks now, tightening the reins on granting loans to businesses, especially small businesses, that could have an impact on the economy in terms of cooling it down a little more than the Fed wants, which could then in turn be costly for jobs down the line. Aaron, Mark?
It's all pretty scary. We're talking about people's money here. Chris Wynn, thank you very much for joining us this afternoon.